Hi guys, a very warm welcome and good morning, and you're joining us live on this broadcast here on Money Control. I'm Stacey Pereira and you're watching us live here on this Wednesday morning. Perhaps some kind of midweek blues we would say, but for now at least what we're looking at, the Nifty 50 has been not been able to conquer that 23,000 levels or so. So we are stuck at those levels, rather close at 22,900. Be that right strategy to be adopting at this point, because we're seeing that kind of trajectory, at least when it comes to the benchmarks and how they've been performing. So let's get going. Let me bring on board Ajit Mishra. He's the Senior Vice President of Technical Research at Religare Broking. Good morning, Ajit. Always a pleasure to have you with us here at Money Control. I was just talking about, let's talk just about the Nifty per se. We've been seeing some exhaustion by the bulls, we would say, at this point, because that steam is at least pulling through by the end of every session. We managed to reach new highs, but then we are just that momentum is not really keeping up, we would say. Are we likely to see this price-wise correction maybe post the rally, we'll say, or post the results? Is that what you're looking at? And what are the charts really suggesting at this point? Is there more consolidation expected to continue in the coming days? And what if we fail to cross this 22,900 levels? Then are we likely to see 22,700, that mark? Are you keeping those as your indicators at this point? What are you reading for the Nifty?
Yeah, good morning, Stacey. So yes, again, after making new record highs, there were hopes that this momentum continues, but we are seeing pressure again around the upper band of this rising channel which Nifty is currently trading in. The 23,100, 150 was a zone basically where we had this resistance of the upper range of this rising channel, and Nifty respected the same, and now we are seeing a bit of a profit taking. But I feel that the trend is not going to reverse, just like that, considering that the VIX has been inching higher for almost 2 weeks now, and still we could manage to post strong gains in the last 2 weeks. This is a normal retracement so far, and I feel that the previous resistance zone, close to around 22,700, 750, the previous high, should act as an immediate support, and then eventually the 20 EMA, which is placed around 22,500, 550 zone. So still it's a buy on dip market, but yes, since we have an impending event, and the volatility is already at high levels, we could see, sharp movement in the index, at least in the next 3-4 trading sessions.
Right.
So if somebody is planning to trade index, the prudent approach is to look for buying opportunity through option strategies instead of going naked long. So around, let's say, around 22,760, 640 zone, one can look for initiating a bull spread instead of looking for a naked buy in the index.
Right. So that should perhaps be a strategy for the index. Look at options rather instead of going plain. But Ajit, also your view on the bank Nifty, because that has for the month of May, if you see, it has been quite a laggard, but managed to see some bit of outperformance coming in the last few sessions. We saw in the likes of an HDFC Bank actually starting to participate in the rally or so, but the index is now placed below those important resistance levels of 49,500. So should one just be waiting for a pullback to enter something like a bank Nifty now? Is that 48,000 levels something that we should look at, or wait for it to break above the 50,000 levels? Because right now we are poised just at that 49,100 odd levels.
Yeah, that's right. So in fact, banking has played a crucial role of late in capping the damage, because now we have started seeing profit taking in the other sectors which were doing exceptionally well earlier. So I feel that it's still comparatively stronger than Nifty, and means on the momentum side at least we can see if there will be any dip towards, let's say, 48,700, 500 zone, there will be a buying opportunity, provided that the market also supports. Because today being the banking expiry, obviously the volatility is going to remain on the higher side. So again, I would say that if somebody is planning any trade, it should be on the buy side, but around the support area, around 48,500 to 700. But through option strategy, by buying 48,500 call or shorting 49,000, that should be the strategy that one can look at in the banking space.
Right. So that can be the strategy in the banking space. Also, a whole host of block deal or block bulk trade that we are seeing happen. Yesterday there were all of 4 that took place, somewhere close to 4,000 crore rupees worth of equities that exchanged hand. Today again we are getting to hear that perhaps PNB Housing Finance is likely to see a block deal. We are given to understand this could be anywhere close to 500 crore rupees worth and somewhere close to 69.6 lakh equity shares that are likely to exchange hands. The floor price for this deal too is set at 717 per share that we are hearing about. But Ajit, when it comes to block deals and how we've seen this transpire, quite a few of those companies with their promoters pairing their stake right now. Do you think these make sense for anyone to be looking at, or it depends on specific counters and why the promoters or the others are selling stake at this point? And how should one be looking at these bulk deals really, since we are hearing so many of them? And perhaps even this PNB Housing, what would be your view on when something like this gets announced?
Right. So, Stacey, there could be multiple reasons that why promoters are pairing stake and they are opting for bulk deal as a route to dilute their stakes. But I feel that the first and the foremost thing that if somebody wish to participate in any of these, actions is to know that whether they are looking for a very short-term, approach or planning any investment based on the recent price tag that they feel is favorable for entering into the position. So it's completely based on the individual stock, based on the fundamentals. For PNB Housing, as the stock has been holding strong for quite some time now, I feel that this dip could be a buying opportunity, especially those who are sitting on the sidelines, because of late we've seen a very sharp move in the stock, and of late it was hovering in a very narrow range with marginal volumes. So there could be an intraday dip due to this deal around 700. We have the major average, the 200 days of exponential moving average. So around that area, in case if it tests, definitely there could be a possibility that we might see a rebound, intraday rebound also towards 740, 760 area. So it's a buying opportunity, especially if you can maintain a strict stop loss in the market like this. So your stop should be at not below 695 levels.
Right.
For this position, and use this rebound around 740 to 50 to book your profits.
Interesting. So you're saying that the dips could be looked at buying opportunity for PNB Housing. Well, let's also address market open. Then we are opening below that 22,000. Is about $1 billion from that Novalis IPO of it. The company now, Novalis is somewhere valued close to $12.5 billion before its New York Stock Exchange listing. Remember, the Aditya Birla Group was in talks about this, the fact that it is now finally going out and going to be listing on Wall Street, and the fact that it has it's looking to raise close to $1 billion from this IPO. That would mean somewhere close to 810 to 945 million dollars is what Hindalco will get from this proceeds. At least that's the likes of what it's looking at from the IPO size, issue size that they've put out. Now, like I said, it is valued somewhere close to $12.5 billion according to this price that they've put. Also, there is an option for a green shoe, proceeds that could go around to get them more proceeds of close to 1.08 billion, and Novalis IPO is a full offer for sale by Hindalco. So that's where Hindalco's stake will now come down to somewhere around 91.4 to 92.5 around post this IPO. So that's where Novalis is really going to be giving in that money to Hindalco, and which is why this news perhaps propping up the stock as well. Not as much though, because the earnings were also just around the corner, and it did see this positive momentum. Even through that, we did have CLSA that came out with a note on Hindalco. They have a buy call with a target now at 770 per share. They say Novalis IPO will imply, it gives that 10 to 12 billion dollar worth of market cap for Novalis, which is quite a positive. Also, the fact that the proceeds from Hindalco towards Hindalco might be around that close to $1 billion is something that does keep the street happy at this point. They've gone on to see that the valuations right now for Novelis is around 8.6 times its FY25 estimated EV to EBITDA ratio. So that is quite interesting to see. Also the fact that in Hindalco's target price, Novelis is valued somewhere around 6.5 times its FY26 estimated EV to EBITDA. So that is also something that will be in focus. They continue to say that the valuation of the company's stake and also the use of that Novelis IPO proceeds is something that will be quite important to see how, whether it is something that will still hold on to, whether those valuations are right or not. But Ajit, maybe you want to quickly come in here on Hindalco and how are the charts really looking? Of course, there is all of this positive news that is coming. But besides that, we've been seeing the metal pack rally and how in the past few sessions at least. So what are the likes? Is there chances of one looking at Hindalco at least, or having some kind of position? What are the stop loss or target that you would suggest for the likes of a Hindalco?
Yeah, so Stacey, in fact, the metal pack is witnessing a bit of a profit taking. Today we have numbers from Tata Steel also, and Hindalco is comparatively looking better because the stock is still holding around record highs, this recent highs, and today also, despite the negativity which we are seeing, the stock is managing to hold its gain. But I feel that one should not maintain deeper stop losses because if the trend has to maintain, it should hold this 678 level, which is 6.7 points down from the current level. So that should be your strict stop. And the high is close from 700, 705. That should be your immediate target area in the Hindalco.
Right. Well, let's try and get some queries answered now then by Ajit. Let's address a couple of them that are coming in. One coming in from Arun Srinivas. He wants to know whether he can accumulate something the likes of an HCL Tech or Infosys at the current market price and from a long-term investment perspective, or can he see these as a good correction? Is there likely to be a good correction in the near term for him that could be a better opportunity? So what should we suggest for to Arun when it comes to HCL Tech as well as Infosys?
So Stacey, in fact, we are very closely eyeing two key sectors which have not participated yet. So one is IT, other is FMCG. And in the IT pack, HCL Tech was among the top performer because despite the overall negativity in the IT pack, the stock could manage to make a new record high. In the month of February this year, around 1620 zone. So this retracement towards the previous record highs is a buying opportunity definitely if you are planning, let's say, for mid to long term. So at least for a year to two, if your time horizon is that, definitely you can utilize this opportunity to accumulate HCL Tech at current levels, and you may add more if it corrects towards 1200 zone. Similarly, for the Infosys also, we are seeing a similar kind of attempt of recovery, but it's comparatively weaker. So I would suggest that as of now, one should stick only with the top names. So HCL Tech is the reference. In case if you are planning to go ahead with both, then for Infosys, keep the quantity limited for a time being now, and let it cross its record high around 1740 to add more.
Interesting. So you're saying HCL Tech would still be better price and better value compared to an Infosys at this current juncture. Well, let's also address a couple of other stocks. We did have IRCTC come out with its Q4 numbers. The net profits were up just by about 1.9% at 284.2 crore rupees on a YOY basis. Revenues were up by a good close to 20% at 1,154.8 crore rupees. We saw EBITDA rising by about 11.6%, whereas margins too have kind of squeezed or declined to 31.4 versus a 33.6 on a YOY basis. The board has gone on to recommend a final dividend of 4 rupees per share. But let's talk about IRCTC or the railway pack with Ajit as well, because that is something that has been in focus. In fact, in the run-up a whole host of PSU stocks, I would say, but also particularly a lot of railway stocks that have been making newer highs every other day. We saw the likes of an RVNL also touch 52-week high, just last week. There were the likes of an IRCON after its numbers that saw some splendid gains. So, railway stocks, is there something that we need to be watching out for? Rather, is it, now the valuations kind of getting stretched because you're seeing that much interest? How would you be looking at something like that, and also IRCTC post its earnings?
So railway stocks, they have done exceptionally well, Stacey. We all know that, and they're still holding strong. But I feel that comparatively, IRCTC offers better comfort, considering that it didn't participate in the similar manner to what we have already seen in the other counters. But since we are seeing a downtick today, the stock is down nearly 4%. On the closing basis, it should hold this 1060, 1050 zone to maintain the positive trend or the bias that we were seeing it earlier. So if you are planning any fresh trades, you can go ahead with that. But on the closing basis, it should maintain these levels to reclaim the previous swing highs and inch higher. So as of now, for the other counters, I feel that you may booking some profit at the higher levels, because the market breadth are also indicating a similar kind of price action, wherein mid cap and small cap index manages to hold flat to green, but the market breadth overall indicates that the participation is selected to the handful of the names.
Interesting. So maybe IRCTC is seeing that pressure now, but there is that momentum there for railway stocks. Well, let's do stay on with us, Ajit. We'll get a couple of queries that come in from our viewers, and so I'm going to ask you to just hold on, and we'll be talking about the broader perspective in a bit. But let me quickly go back to Ajit and get a couple of queries done then from him right now. Ajit, Ashwin wants to know whether it is a good time or good level to be entering something on the likes of a Geo Finance. So what would we suggest to him at this point? If one is to look at Geo Finance, is there an entry level right now, or what would be that level that he should track?
So Stacey, we have seen phenomenal move post listing in Geo Finance, but now we started seeing a bit of lack of momentum or bit of early distribution sign. So for a time being now, I would recommend to wait and let the stock stabilize about 360. If it reclaims that mark, then definitely one can look at re-entering. Otherwise, on the downside, you might get the level close to around 330, 335. So wait for either side break or sustainability above, let's say 360 or a dip towards 330 to enter fresh in Geo Finance.
I hope that answers Ashwin's question. Another one coming in from Anirban. He wants to have a view on MTAR tech stocks. He has got some of them already, and he bought them at 1,864. Today it has fallen, he says, due to the quarterly results, and whether he should hold on to it or buy some more on the dips. What would you recommend for MTAR?
So MTAR is underperforming in the current market scenario. The stock has retraced from roughly around its previous high of 2,900 to 1,700 mark. But the downside also seems capped, because of late in the recent months we have seen the stock forming a very strong base around 1,700 mark, and it's holding in today's session as well. So after the gap down opening, we are seeing the stock is managing to retrace, recoup most of its losses. So yes, you can add more, but now for the entire position, your stock should be at 1,740. So if you are okay with that, you can add to this position. Upside around 2160 is going to be the first resistance, and then 2340.
Right. Siddhartha, come have you give us your last word and also address one query before we go. One wants to know your view on Adore Welding at this point. I'm seeing that the stock is down by about close to 1.5% at this point. But what is really the trigger here, and how should one be looking at this particular stocks? And also, if you have any other stocks that you have on your radar and would like to recommend our viewers.
So certainly, Adore Welding is a normal profit taking that we've been seeing after a phenomenal surge from 600 to 1,700 mark. So if you have any position, you should definitely liquidate, because we have already breached the key support area around 1,300 mark, and the volume have also increased substantially. So again, maybe closer to around 1120 that you might look to re-enter. Now coming to the stock specific moves that we are seeing today, despite the negativity, the good part is that certain pockets like Bharti Airtel, which is holding strong, that one can look at. Then we have SBI from the PSU pack. which is maintaining around the record highs. So these are some of the names which one can look at. But be restricted to your positioning, considering that the overall tone of that we are seeing is slightly on the negative side. But yes, selective participation is something that we might continue.
Right, so selective participation, and he's liking stocks like Bharti Airtel as well as SBI. Well, thanks so much, Ajit Mishra there from Religare, for giving us your perspective, helping our viewers with their queries. But quickly, one last question that I'm going to pull in from Siddharth as well. But thank you both gentlemen for giving us your time. Siddharth Khemka from Motilal Oswal as well, helping us with that perspective. And hopefully we will touch base sooner, perhaps, when we have more to do, either the exit polls or post the results, where we can talk about, a different kind of scenario that markets would really take. But for now, both the indices are trading rather flat, we would say, in that negative zone currently. Nifty at 22,800 odd levels, the Sensex also below that 75,000 levels at 74,900 odd. So that's where we are closing this day. But hopefully through the trading session, we might see some bit of action and momentum, but all of those stocks that you could keep in focus. But for now, it's a wrap and goodbye from the entire team that puts this piece together. Thanks so much for watching. Do keep post us your feedback in the comment section, and also write into us with your queries, and we'll try to get them answered on our live feed. You need to be sending us the queries that you'd like our experts to give their views on. But for now, it's a goodbye. Thanks so much for tuning in.